Good morning, everyone. It's Tuesday, October 18th. We've got I think, some good price action starting to unfold here, moving into our favor, and I'm hoping we're going to get a setup either today or sometime this week. We could get a setup in several different investments. We'll see how things unfold. But let me quickly run through the charts here. Here we've got the US dollar index. This is the 60-minute chart. I'm actually just going to go to the 4-hour chart because that's what most of the other charts I'm going to show you this morning are based under. It's easier if I keep everything in the same time frame. Just let this page load here. More or less, we've got the US dollar index, and you can see this is spanned over about a month, 2 months, month and a half, 2 months. And what we've got here is a key. There's actually a spike back here. Let me just pull this price action up. You can see we've had a pretty substantial drop in the US dollar index. And a long time ago, I pointed out after we caught this nice move to the upside, we had these three surges to a high. I pointed out that we had a key support trend line. When it got to this level, we were talking about, is it going to bounce or is it going to break down? And we clearly got a strong breakdown, and simply as it started to break down, it triggered these key pivot lows. And once it broke those pivot lows, we just saw the market collapse even further into an oversold condition. So now what we've seen is a continued drop in the US dollar index. Yesterday morning in pre-market, I pointed out we're starting to break this resistance trend line, and if we get a break of that, we're likely going to see the US dollar probably work its way up into some type of rising wedge in the next couple trading sessions. And if we do get a nice fade back up into this level, we'll be looking to actually likely take a short position for a continued move lower. So that's kind of where we stand with the US dollar index. I do think it's going to wiggle its way, work its way up, and as it goes up, we're going to see stocks and commodities come down, as I pointed out in the weekend report and yesterday's pre-market video, and that started to unfold yesterday and this morning. So I do think there is still quite a bit more time that is going to unfold here, but we'll just see how that kind of plays out. Now, looking at commodities, here's the crude oil chart. Again, it's the 4-hour chart. I'm zoomed out a little bit further, several months here, just so you can see the overall bigger picture. And what we have here is we had a strong downtrend, and then we came into this rising wedge, which we actually took a short position here, caught this nice downdraft for an 18% gain. And since then, once the market became choppy, we reached our price target. We've been in cash, letting the market work itself out. And right now, it is more or less trading up here at support and right through a key resistance level through the middle of this noise. And you can see there's the breakdown level here, the test. That's right where we tested just the other day. And since then, it's been pulling back. And the fact that we've seen a strong move up on crude oil, and the fact that we're at key resistance, and the US dollar is putting in a bounce, I'm anticipating we're probably going to see crude oil fall back down to the 82.80 level, somewhere down in here. I'm anticipating. So we'll be looking for likely a short setup in crude oil if things play out in the next session or so. Looking at precious metals, gold and silver, pointed this out again yesterday. More or less, we were in this rising wedge, which we broke out this morning. I pointed out this is the same pattern we saw in crude oil. The overall trend on the short-term basis is down. Volume confirms that, strong selling. We've seen prices hold up and kind of slowly grind higher into a resistance zone. We have more or less a little bit of a resistance zone through here with this breakout, this gap and run, and this pivot low. We've had this higher move up here, and of course it's happened on declining volume. And I pointed out that we could see a double low. We could actually see crude oil go down to around the 1450, 1440 area. Sorry, not crude oil, gold. So if I just clear the chart, you can clearly see that now we're starting to see gold pull back here. It is at a pretty major support zone. If I was to just zoom in, you can see the support area. If you just go right through the middle of this noise, which is a pivot low, pivot high, right through the middle here, we're trading right in the middle of the range. And I pointed out once we had this huge sell-off and this first bounce and started to pull back, I pointed out a long time ago that we're likely going to be trading in this range for quite some time. and there's a good chance we'll see a double bottom here, or actually a pierce of that, and for it to go a little lower, which will cleanse the market in a nice three-wave correction, which will be at 1, 2, 3, and it's that third wave that creates a lower high and a lower low, and that scares a lot of people out of the market. That's when the market usually bottoms, and from there you'll see a very strong rally, usually back to the upside. So that's kind of where we stand right now. Gold is trading out of support in the mid zone. It's a 50-50 guess more or less where it is headed, simply because it is at support. But overall, the pattern here is pointing to lower prices. We've drifted up into resistance. It's starting to head down. I am favoring neutral to bearish for a test lower, but I don't want to be really shorting gold at this time, or silver, simply because we could have some pretty major issues happen overseas and money just piles into gold in a blink of an eye, and silver, and we could see it jump. So it's you got to be very cautious. I think shorting gold and silver, because money can move into them very quickly and spike them higher. But overall, I am bearish on gold and silver right here. Here's the silver chart, zooming back several months. Silver's doing the same pattern. Started to break down yesterday or this morning, and more or less trend is down. We've got a pennant, which is a consolidation pattern, usually a halfway mark. So if we see that next move going down, there's potential for a very sharp drop in silver also still. Now taking a look at bonds, pull up the bond ETF TLT. This is the 20-year treasury, and I'm just going to zoom out. I'm going to go to the 4-hour chart so everybody we're on the same time frame. Zooming out, you can see more or less where we stand. We've had a nice run up, starting to become very unstable. On a short-term basis, it has broken its support trend line, and right now it's starting to become choppy down here the past couple trading sessions. What I pointed out yesterday is I'm looking for some type of, more or less, this little rising, a bear flag is what it'll be, and if we can get something on that angle in that range, we'll end up for a very good shorting opportunity to move to a nice move to the downside in bonds. But again, I'm not jumping the gun on that. I'm going to wait and let things unfold before we take any position in there. Now again, what we're seeing right now in the overall market is a rising dollar, which means stocks and commodities are falling. So we're going to see bonds try and work their way up. Money's going to move into these safe havens, drift up here until the US dollar, I think, finally puts in its full kind of bounce, and then once the dollar move is over, we're going to see the dollar fall, and we're going to see money move into stocks and into commodities and out of the safe havens like bonds. So as stocks and commodities rise, we're going to see money come out of these bonds pretty sharply, I would think, and go into stocks and commodities for much larger potential. But again, if we can play this short, we can get just as much, if not more, potential with a nice bond drop in the next month or so. Now, taking a quick look at the SP 500, here's the short-term intraday chart. This goes back about a month and a week. This is a 10-minute chart. I've just condensed it, and I pointed this out a couple sessions ago, that we're coming into this choppy topping pattern, and this is what I was looking for just the other day. I pointed this out in an intraday update. I marked these as orange kind of boxes, but we had this big gap down, looking for a fade to go up to make a high, possibly a new high, and then we could see the market actually roll over. And that's where we are this morning. We've done that. We've come back down, and now I'm just looking for some type of consolidation or small bounce here, and we might be taking a short position to catch a downdraft like this, where we just see the market go into free fall mode, and we could see it pull right back down into a key support zone where we have these pivot lows, this consolidation, a little bit of a consolidation, and some more price action went through here. So there's good potential for a nice quick drop that could be a 1 or 2 day play. So we'll see what happens there. I am interested in taking a small short position. It's not really a day trade, but it may only last 24 hours or so. We might get into it sometime this afternoon and get out at the open tomorrow if we get a big gap to the downside, just like what we see here. If we short the market here, we could see a big gap the next day down here, and we literally get out on the gap. So it could be something very similar to that. Now looking at the SP 500 futures, this is the 24-hour clock, which you can see on the volume on the bottom here. The large volume surges, again, this is regular trading hours. This is when the majority of people are trading at 9:30 to 4 Eastern time. So that was Friday's session. This was yesterday's session right here. And after Friday's strong close, we actually saw the market run up yesterday morning, or yesterday Sunday evening and Monday morning pre-market. We saw it come way up here, making that new high, and then in early morning it started to sell off. We saw a huge extended sell-off all day yesterday, and there's been zero bounce through the night. It's actually traded lower and traded sideways, which is more of a pause. So we may get a little bit of a bounce today. Generally what you see is a running of the stops of the shorts, so we could see this high pierced. We might see this pivot high pierced, and we might even see this one. So if we do get some type of small pop here, we might actually have a shorting opportunity to short it and continue to see the move down. So we'll just see how things play out. We may only get a small around the 1200 mark. Market could come up, hit its head on it, and then roll over. So we could be looking for a short a little bit lower than that. Now taking a quick look at the market momentum, which I forgot to cover yesterday. I thought I did, but in the middle of after I sent the video out, I realized I didn't cover it. The market momentum, I just want to show this chart here. Yesterday we were trading, again, this chart is tough to read simply because it really isn't, the recent volatility has made these numbers crunch fairly tight together, but more or less when we're trading above this 101 mark and trading below the 99 mark, so when we're above it, the market is overbought. When we're below it, the market is oversold. Yesterday we saw the market was trading, it closed on Friday up here around the 102 area, indicating the market is overbought and we're likely going to see some type of pause or pullback. And yesterday we got that big sell-off, and now we're actually oversold on a short-term basis. So today we might see that pause or a small bounce in the morning, bringing this indicator back up into the norm, the middle, the medium, and then from there we may actually be looking to short the market for another move down. Now if we also take a look at the stocks trading above their 20 period moving average, just let this chart pull up here. So this chart here, the stocks trading above their 20 period moving average, I consider anything above 75% to be an overbought market, and you have to start watching for topping signs. So if we just quickly draw this in, anything above 75%, you must be aware that the market is overbought. Too many stocks are trending up. They're in a strong trend up, and usually when everything has been moving up in sync together, it's usually near the end of a move, and that's where we were trading yesterday and previous intermediate highs. You get up past this level, like we saw about 87% of stocks the previous day on Friday closing above their 20 period, and that's just too high. Usually you'll see big money start to pull money off the table, and you'll see a big sell-off. So that's where we started. I think we're just starting to see another pretty sizable dip in the market here. Now taking a quick look at the volume analysis, I'll have to see how it pulled up for yesterday. I know on Friday it was very, very bullish. On Friday we saw buying overpowering the selling by about 5 to 1, I think it was. But yesterday we saw about 9 to 1 selling, which is panic selling. That means there's about 9 people selling to every 1 person buying, and that's a pretty bearish sign, especially when you're at this market top. I think we'll see some continued follow through in this selling probably today and this week, and then after that, once we see it come down to a support zone and the selling starts to dissipate, then we could be looking for a nice long entry. Depending how things unfold, this market could fall apart. It could just continue to crumble and go into a spiral and sell off for another month. So again, we're going to reanalyze every day, because you can't just pick make a forecast and expect it to go there. You have to reanalyze, and forecast change on a day-to-day basis depending on the price action, the volume, and the news. So anyways, that's it for this morning, and